Happy hump day, everybody. Glad you're back here at the BBQ Investor. What a day. Thought it was kind of a slow day when I started at today. I even had a conversation with Chat this morning. I was like, yeah, it's not a lot going on, don't seem like, Didn't know what to expect from the summit at the White House today and everything else, but then some other news came out and it just kind of steamrolled and been a pretty good day. Bitcoin's up to around 69.2 right now filming. It's been up a little bit higher, trying to break that 70,000. Still wouldn't say the low is in, guys. Don't get too excited. I wouldn't go long with a bunch of leverage or anything like that. Of course, I'm not a leverage guy, but we'll take a look at the liquidity map later. And I think there were probably some shorts that got liquidated today. And don't get yourself caught into a long liquidation either. So let's see what happens. Chat has got a great report today. We're going to get right into it and get busy. And then I'll be back after he is finished. And we'll have a little bit more talk. Let's get after it, Chat.
Today, the market received two very different messages from Washington. The Treasury told the bond market, we see the pressure. The Federal Reserve told investors, do not assume inflation is defeated. And at the White House, crypto executives were asking for rules that can survive longer than one election cycle. That combination helped stocks stabilize, pushed Bitcoin briefly towards $70,000, and gave one crypto asset an especially dramatic afternoon. But underneath the green candles, the message is more complicated than risk on his back. Let's check the receipts. The Treasury Department said it will at least double the size of liquidity support buybacks in longer-dated government bonds beginning in September. The immediate purpose is market function, buy less liquid older debt, improve trading conditions, and reduce some of the pressure that had driven long-term yields higher. That matters because long-term yields affect mortgages, business borrowing, and the value investors place on future corporate earnings.
And for me as a growth investor, that's very troubling. The reason is that when bond yields go up, especially to 20-year highs, future earnings are worth less, right? Because you have to discount them back to the present at a higher rate.
The market liked the announcement and longer yields moved lower, but this is not the Federal Reserve cutting rates, and it does not eliminate the government's debt or inflation problem. Think of it as the Treasury widening a clogged lane, not removing every car from the highway. Then came the minutes from the Fed's July meeting. Officials voted 9-3 to hold the policy rate near 3.6%, but many participants believed another increase could be needed if inflation does not continue to cool. That is the tension for investors. Treasury action can improve liquidity at the long end, while the Fed remains cautious at the short end. Lower yields today are helpful. They are not a promise that money stays cheaper tomorrow. Monday, we said the consumer companies reporting this week would help us judge the economy beneath the headlines. Now the first evidence is arriving.
Because I keyed in on that during the jobs report. Yeah. There was, retail shed jobs, and we got retail sales on Friday that were a little bit weak. And we do worry about the consumer because that's what holds up the majority of this economy. And so we're going to be hearing from Target. We're going to be hearing from Walmart this week. And so when you look at some of these discounters, they might hold up because that's where folks are switching their money over to. But retail overall, are you worried about it?
Target reported a second consecutive quarter of comparable sales growth as its merchandising changes attracted more shoppers in stores and online. That is an improvement, but one company does not settle the consumer debate. Walmart reports next, and the comparison matters. Are shoppers spending comfortably or merely trading down toward value? Retail earnings are useful because consumers generate roughly 2/3 of United States economic activity. The cash register can confirm or challenge the story told by a market index. At the White House, the central question was not whether crypto exists, it was which rules govern it, who enforces them, and whether those rules survive the next administration.
Clarity is going to continue to be helpful. Again, it's really about durability, and the best way to ensure durability through multiple cycles, political cycles, is to make sure there's legislation, because it's not great for the industry for the rules to change every 4 or 8 years.
That is the strongest argument for legislation. Regulatory interpretations can create a bridge, but legislation creates durability. The meeting also produced an asset-specific headline. Reports quoted President Trump saying the CFTC is working on a legal path for hyperliquid in the United States. Hype jumped roughly 20% intraday. Our hype alert remained active and did not fire. We checked the configuration and Brad is keeping the setting. That does not automatically mean the strategy failed. A price can explode without completing the system's entry conditions. The asset moved, the system stayed out. Participation and discipline are not the same thing. Bitcoin moved from just above $69,000 to nearly $69,900 while we were assembling this report. On the CoinGlass 24-hour liquidation heat map, price pushed through several brighter bands near the top of the recent range. That supports the idea that short liquidations helped accelerate the move because forced short covering becomes market buying. After that sweep, the more visible remaining liquidity sat below price, especially through roughly the mid-$64,000 to $66,000 area. That does not predict an immediate drop. Liquidation maps show where leveraged positions may be vulnerable. They do not show where price must go. The next test is open interest and funding. If price keeps rising while leverage rebuilds aggressively, late longs can become the next fuel source in the opposite direction. If spot demand carries the move without leverage overheating, the rally has a healthier foundation. A heat map is weather radar, not GPS. In the separate live regime strategy scorecard, VVV triggered another automated purchase last night. At Brad's latest check, that open position was approximately 6% above entry. That percentage is unrealized and must be refreshed before export. Hype did not trigger. We will not rewrite a tested entry merely because the market showed us the trade afterward. A strategy is allowed to miss moves. It is not allowed to change its rules every time hindsight starts yelling. In the Robinhood live agent lane, Sonnet made another partial reduction in the energy position. We will use broker and journal evidence for the final percentage update and keep that lane separate from every paper, crypto, options, and research sleeve. So today's scoreboard is unusually clear. Treasury liquidity support helped calm the bond market. The Fed minutes kept inflation risk on the table. Retail earnings began testing the consumer. Washington gave crypto a policy catalyst, while Hyperliquid received a much more specific one. And Bitcoin's heat map says the first squeeze may already have happened. The leverage that rebuilds next could matter more. Brad, you said the summit could struggle to move crypto positively, but could hurt it if the news disappointed. Instead, the meeting delivered enough policy momentum to wake the market up and enough leverage to keep everybody honest. Back to you.
Great job, chat. You know, the content just keeps getting better and better. So excited for where this is going. What a day. This just goes to show you can't ever think it's going to be a slow day, you know? There's days that I think there'll be some earnings coming out and I'll think, wow, today's really going to be a big day, and it ends up being like really nothing. Today was one of the days it was just the opposite for me. I wasn't really sure what to expect, but here we are. So, going to be a lot to talk about on Friday for the weekly finish. Chat did such a great job there. I don't really have a whole lot to add, honestly. We're just got to watch for liquidations, guys. Let's see where this goes. See if Bitcoin can actually break through and get some traction, or if it gets rejected and we start to come back down. The market overall was pretty good for me today. I was up around, I think my portfolio is up around 0.8, 0.9%. Hey, I'll take that overall, you know, because that's, I mean, like I said, I do a lot of broad market. You see me talk about the crypto a lot because the crypto is the most volatile part, but a lot of my portfolio is pretty boring. So, and that's a good thing. So, hey, thank you for coming and listening to us. And I hope you're really enjoying the content. Please subscribe. Smash that like button, leave a comment, and we will be back Friday again. I am Brad, and I am the BBQ Investor.